Hi Richard, thanks for joining us today. I'd like to start with the name of the fund, Crux European Special Situations. Why special situations?
Well, I have a problem even trying to think of a name for a dog. When it comes to trying to name a fund, I've never really given it an enormous amount of thought, but I think what special situations does do is it just makes people appreciate that with nothing to do with an index, but it's much more about finding good companies which aren't very expensive and where we believe there's a good long-term future.
And why Europe? Why is that such a good hunting ground for an active fund manager?
I've never tried to push Europe. What we're trying to do is find good companies that are born in Europe and then do their thing really globally. Most of our businesses are pretty global. If you break the portfolios down in terms of where we are in currencies, roughly speaking, it's about a third dollars, a third euros, and a third everything else. I think that tells a story. But there are some good companies in Europe where management or family are big stakeholders, which we like, and actually they've had a very good track record. And I think there is still quite a big difference in terms of valuation there than perhaps other places like the US.
So you mentioned that you like to invest in family-owned businesses there. When you meet company management, what is it that you're looking to get out of that meeting? What do you learn that you can't get from an annual report and accounts?
I think what you get is a real feel for what they're trying to achieve, what their end game is. Very often if you talk to the original entrepreneur, you kind of want to know what he wants to do in the last 10 years of his career, as it were, and you can't really get that from a report and accounts. And I just like to see the guy to make quite sure he's still as keen, as focused and everything else, and without meeting somebody, I don't think you get that feel.
Your fund has performed well since it launched 2.5 years ago, but it had a period of underperformance at the latter half of 2016 and again earlier on this year. What happened?
Well, I think last year we had a bad final quarter. It was really just because a lot of the stocks which we just don't own, like telcos, utilities, Southern European banks in particular, which have been really bad for investors over the longer term, had a big rally. And that does happen occasionally, but that's not a reason to invest in the longer term. I think this year, we had at the beginning of this year, we had a stock called Aurelius, which is a big position for us, which was the subject of a short attack. A short is when people benefit from the stock price falling. And the people who did this put out some very scurrilous stories, which to be fair worked very well for a little bit. The stock has actually pretty much fully recovered since. And so we've ended up so far this year ahead of the market by a couple of percent. So we made it back, but it was a tricky month, I guess.
So Richard, when you invest in a company, what characteristics are you looking for?
Well, we like companies which have a very sticky revenue stream, i.e. lots of recurring revenue. And we like companies which have a very high return on their investments. And that kind of works for us in a very high cash conversion. Typically, we like companies which are able to dominate a global niche, because I think that demonstrates the quality of the business. And we like companies where management have their own money in size in the business. I think it makes people focus much more.
And can you give me an example of a company that meets those criteria?
I think one that would spring to mind is a company called Coor, C-O-O-R, which is a Scandinavian business, which is very an outsourcing story, catering, office cleaning, that kind of thing. It came to the market 2.5 years ago, actually the day we started Crux. And what we like about that is it has a lot of recurring revenue, about 85+% of its contracts are recurring. We like the fact that it doesn't need much money to grow. It's got very little debt. It could do some very useful acquisitions which would be very well received by the market. And the valuation is not at all demanding. If you look at the dividend yield alone, next year we think it's going to yield 5%. And it's on a price earnings multiple of about 13.5 times, which is very much cheaper than its peer group. And management have shares and they've done a very good job. So it's a good example of the sort of thing we're looking for.
Now I've heard you say before, lose money more slowly with me. What do you mean by that?
Well, that doesn't sound very encouraging, I know, but I think what I really mean is that it's very, very important to have strong fundamentals. If you look at, say, a very difficult year for companies, which was in 2009, and you analysed our portfolio, you'd find that there was an enormous difference between how our companies handled the difficult time and the markets. And I think eventually, obviously, sentiment will do whatever it does for the stock price, but eventually, obviously, these things are driven by fundamentals. So our companies are very defensive, fundamentally, which I think is very important.
So the idea is that if the stock market falls, these companies would hopefully fall to a lesser extent?
I think so. Certainly, given time, I think we would find that even in the very difficult market, capital preservation very much kicks in.
And what is it that keeps you coming into the office every day?
Well, I think there are a number of reasons, really. I mean, I think it's fun. It's a great opportunity to meet people who are actually changing the world, very often for better, actually, which you wouldn't have if you didn't do it. Obviously, we're hugely privileged to be able to just talk to pretty much any CEO or CFO, which I think is a very unusual thing to be able to do. And so I think it's very hard to get bored of that job. I also have a great team, and it's quite fun to be amongst good, young, intelligent people, and that's why I come in.
You mentioned your team there. When we spoke, when you first moved to Crux, you talked about setting up quite a young team around you. How's that worked out?
Well, I think it's, from my point of view, very, very well. We've got Roland Grender, who's in his late 20s now. I met him when he was an intern and wanted to hire him immediately. We had to wait a bit, but he got a job cold calling Gabelli in New York, a big hedge fund manager, on the strength of his cold call and his spreadsheets, which is unheard of. And then the other guy, who's now in his late 30s, who I've worked with for 10 years, is James Milne. James also went to Oxford. He got double first at Oxford in engineering, and just to sort of thrill the girls, he got the top results in his year in his accountancy exam in the world, actually. So that's very unusual. But he's still quite fun despite that, and it certainly works for me. I think I'm very happy with the team.
That's brilliant. Thank you very much.
Thank you very much.